Right, so the stock market gave President Buhari's new cabinet 1.1 ministers. That's what United Capital analysts called initial euphoria from the equity market. We finished off positive on Wednesday because the market, according to United Cap, took the swearing in with some positivity, quote unquote, perhaps with expectations that hastened fiscal policies and implementation of plans might revive Nigeria's lackluster growth. That is a comment from one-pager statement that United Capital released late yesterday because on the back of the new cabinet and ministerial position. So let's check this in with Temple Ashajo, our business correspondent at the Nigerian Stock Exchange. Temple, that was your 1.1% uptick because folks says, well, initial euphoria. Great. What sectors gave Mr. President this 1.1% again on the equities yesterday, the trading board? Good morning.
Good morning, Bosun.
Yes.
Good morning, Bosun. Thanks for this opportunity. Well, great. It was just the major media and the large cap stocks that gave Mr. President this much euphoria that you've just described, in line with what United Capital has actually released this morning. And of course, thanks to the fact that it gave us some 120 billion naira plus on the market yesterday, investors, analysts, market watchers generally are expecting this euphoria to also continue for today. But that is also coupled with the fact that we had some, we've got prices really very low, don't forget. And of course, investors are looking at some good stocks with fundamentals in the market to actually lock down in. You've got the likes of Dangote, you've got the likes of Zenith Bank, you have MTN, which made a comeback yesterday as well. So that's what actually was responsible for what we saw yesterday, which at the end of the day moderated the losses that we've had week to date into some kind of a positive position and reduced the year-to-date losses now back to 12.9%. And of course, we move on. We saw the fact that volume of transactions yesterday, talking about the activity level now, was really positive, up some 74%. Yesterday, we saw UBA contributing some more than 363 million units of the shares, which is traded. So that's our performance in the market. And we had some 23 gainers as opposed to 16 losers in the market. If we go by the sectoral performance, you got the banks doing so well. Consumer goods segment of the market, Nestle, one of the major stocks with fundamentals that investors sought after, given the bargain hunting that we saw around that particular security. Yesterday, it closed up 1,200 naira. Recall that this is a particular stock that is now trending much lower year to date by some 9% or thereabouts compared to how it opened the year. If we go by what we saw on the industrial goods side of the market, that's experienced some declines. WAPCO, due to some kind of profit taking on that particular security, was down by some 36 basis points yesterday. We got the insurance side of the market really, really upbeat. Investors are positive about this particular sector, given the recapitalization exercise still happening in that space. Mansard was up by more than 9% yesterday, and that contributed to the gains that we saw in the sector. If we go by the energy stocks performance, was lackluster yesterday, down sectorally by 74 basis points. We got Forte Oil now down to around some 4 to 5 years lows now, having lost some 10% in its share price yesterday, in spite of the fact that we know that there's been a date now announced for the annual general meeting sometimes in September. So we see investors really, really giving cold shoulder to this particular oil and gas company. Corn oil was unchanged. Forte Oil, as I said, was down. You got O&O, some kind of profit taking there because the day before it has actually gained some good appreciated in value. But yesterday it fell by 1.3%. All other stocks in the energy energy segment of the market that we track were actually unchanged. You look at the USI of the unlisted securities market, that was down yesterday by some 0.18%. We got only 5 securities out of 38 securities tradable on that platform traded yesterday. Just 137,000 plus units of shares traded on that side of the market. Fixed income space, talking about bonds now. The DMO actually had its auction yesterday. Investors undersubscribed seriously, very significantly. Some analysts have described that performance yesterday as the lowest in 2 years. Some said it's the lowest since December 2018. But basically, it was only 95 billion naira out of the 145 billion naira that was offered by the DMO that was subscribed to yesterday. And of course, we know that the total subscription that we had eventually, that the DMO sold, was just 13.5 billion naira. That's really, really low. If you look at the secondary side of the market, it was really mixed with a bit of a bullish tilt, though. We saw yields declining by some 2 basis points on the side of the market, as investors really weren't too interested in the primary market auctions. And that's given the global and, of course, domestic issues that we're having right now. For the Treasury bill space, Treasury bills was also mixed yesterday. You got average yields advancing by 11 basis points eventually, Bosun.
Yes, Temple, quite a very interesting scenario at the marketplace for Treasury bills. We get a bit more explanations from the folks via the FMDQ exchange place a little bit later on the show. Thank you so much, Temple. I'll see you in a couple of minutes to take us through today's trading day. But of course, the pressure was there, as you likely saw, on Treasury bills maturing in the month of October. 64 transactions, 16.49 billion. So investors sell off the secondary market for Treasury bills continue apace. But let's chat to some, what are some of the burning economic issues that we have for consumers. That's coming through in just about a minute. What's the big story? President Buhari's announcement of cabinet ministers yesterday is still the big story everyone's following today. But of course, you heard what the highlights were. 14 ministers returned to their portfolios. Out of the about 45 of them, 5 new federal ministries are now created. So we have a bit of an enlarged cabinet here. Finance will now be housing, budgets, and national planning. Power was taken out of the Fashala's ministry. He is now in charge of works and housing only. You have a new power minister and a standalone ministry. Aviation was separated from transportation under Rotimi Amechi. Police affairs, of course, a lot of issues with insecurity at home. So the police affairs now get a standalone ministry. There's a new ministry, which is very important. I want everyone to pay attention to this ministry moving forward. We have a new Ministry of Humanitarian Affairs, Disaster Management, and Social Development. This ministry is very critical. When we're looking at the last 10 years of Boko Haram insurgency, we've seen deadly banditry and a lot of other issues. Then we've seen flooding with some forecasts made for the current year. So this ministry is very critical in the socio-economic development. But this is very critical. Everyone should pay attention to this ministry, new ministry in charge of humanitarian affairs, disaster management, and social development. Of course, Mr. President is keeping the petroleum ministry. Yesterday, also reappointed and promoted Dr. Jumake Oduwole as special advisor to the president on ease of doing business. She is the head of the Secretariat of Presidential Enabling Business Environment Council, or called PEBEC, which of course runs under the office of the Vice President. Dr. Jumake Oduwole got a promotion there yesterday. So let's talk about the commodities market. What are the burning economic issues? Let's talk to Nosike Nwajide, who is a member of the research team at Financial Derivatives. Is live to us today from the Nigerian Stock Exchange. Our studios were downtown Lagos. Good morning, Nosike. It's good to have you on the show.
Good morning, Bosun.
Yes, the new ministerial cabinet, I'm sure, will be part of the conversation between you and the rest of your team yesterday.
Yes, it is. It has been so far. I mean, we're patiently waiting for the cabinet to be set up. We wanted to see the structure and the composition of the fiscal team. You're aware that until now, the CBN, to a large extent, has taken up the responsibility of attempting to drive the economy. But now, with the launch of with the inauguration of the cabinet, that'll be squarely in the hands of the fiscal team. We expect fiscal policy, the budget, to be passed, and the focus on growth, which has been struggling of late, and the widening fiscal deficit. We expect them to be addressed squarely, and that may mean maybe increased borrowing, increased foreign Eurobond, might influence some Eurobonds, given that they may not want to crowd out domestic borrowing. Foreign borrowing would lower interest rates, obviously. So that would be, I think that's squarely on the cards for now.
What are the key concerns for your team at FDC when it comes to the consumers market or commodities market? Is it on the side of crude oil or the side of soft commodities?
At the moment, the worry is crude oil. Obviously, there's this huge uncertainty about a global recession, a recession in the U.S. and a global recession. There was a rise in crude oil prices yesterday, but those gains were capped by the uncertainty. There was the larger than expected decline in U.S. inventories. Typically, that would boost prices, but those gains were capped by the uncertainty. There's also OPEC's August report that came out a couple of days ago, and it didn't really have good news about the forecast for demand. And there's expectation of an oil glut sometime next year. So that negative sentiment is dampening prices at the moment. There's also obviously the U.S. and China trade spat that has lingered all too long, and that's the end. There's no end in sight to that at the moment. There's also the U.S. shale production, which has been resilient and is expected to increase even further. So all of that will contrive to dampen sentiment on oil prices. So that's the major worry at the moment.
On the food side, because I'm sure that's music to everybody's stomach when you talk about food. So let's chat a little bit to soft commodities here. Where's the playbook out there in terms of prices and outputs among the major producers, if we're talking about corn, wheat, rice, or millet, or sugar?
Okay, wheat prices fell yesterday. There was news of a bumper harvest in India. India is the largest producer, one of the largest producers of wheat in the world. So there was news of a bumper harvest that depressed prices. For cocoa prices, it fell. There was news of increased robust demand globally, and that fell. We expect it to fall even further. We hear that there's been the weather conditions in Ivory Coast, who's the largest producer of the commodity. The weather conditions have been very favorable to cocoa planting and production. So we expect those prices to fall even further. For sugar, the Brazilians are the biggest producer, and we hear that there's increased production. That would depress prices in the coming weeks. So that's basically what the market is saying for now.
Okay, so what about tomato? I just saw that the trade conflict or spat between Mexico and his big brother up north, which is the United States, has been resolved.
Okay, there was an anti-dumping investigation that was basically put on ice about 2 decades ago. It's lingered on for the past 2 decades, and recently Trump administration brought it up and used it as some sort of, bait. And they basically told the Mexicans, if you need to curb illegal migration, or we would increase or put tariffs on tomato exports from Mexico, about 17.5% tariffs on tomato exports from Mexico. So this is basically compelling the Mexicans to address illegal migration issues. And when it was announced, I mean, the tariffs, the sanctions are off for now, but when it was announced, it caused panic in the global tomato market. But we expect prices to fall further as news of the sanctions are being put on hold till September 5th, where they will review the efforts of the Mexicans at curbing illegal migration. We expect the Mexicans to fall in line and expect prices to fall in the coming weeks.
Okay, so I'm sure you'll be listening to Jerome Powell at Jackson Hole conference. What do you think is going to say, and why would Jerome Powell's statement be important for everyone around the world, including our own central bank and, of course, definitely our own government at home?
Okay, Jerome Powell is expected to give a keynote speech at the Jackson Hole Symposium tomorrow. He basically would outline the direction of U.S. monetary policy for the rest of the year. And typically at this time of the year, the markets hold their breath to see what he's going to do. But I think it's pretty clear what he's going to do. I mean, it's not. He would want to outline the reasons for. Basically, the U.S. intends to cut. The Fed intends to cut interest rates, and he expects the market is expecting to hear justification of the reasons why. The Fed is also under a lot of pressure from Mr. Trump, who wants them to lower rates so that U.S. exports could be more competitive. So the Fed would be keen to ensure that its justification doesn't seem as if it's because it's under pressure from Trump. So, but basically, the U.S. is going to lower interest rates in the coming, at least twice before the end of the year, and that should be some respite for emerging markets such as Nigeria, and expect to keep some of our FPI outflows in.
Okay, so let's piggyback a little bit, Nosike, back to the new cabinet. Are you folks, as analysts, as research analysts, begin to think through what the new cabinet would do with electricity when it comes to tariff, with petrol prices, and a few other issues, minimum wage that we've left hanging, that now that you have a new ministers in place, everyone will expect them to address these issues moving forward?
Yes, for power, we saw that the Ministry of Power was separated from Works and Housing. It was lumped together at the last administration, but I think for obvious reasons, they separated power because it's basically, I mean, if you want to industrialize your economy, you need to sort out power. And one of the things, the policy and regulatory aspect of the industry, given that it's been privatized, the generation, transmission, and the distribution aspects have been privatized. For generation, you need to, for generation and distribution, you need to sort out the tariffs. You need to give investors incentive to invest. And I think, obviously, a higher price is always incentive for any producer or any supplier. So I think the tariffs, Nigerians need to expect an increase in power tariffs before the end of the year. I mean, it's crucial. I mean, people might resist it, but it's something that needs to be done. If that's sorted out, then obviously industries, other people spend less. People might spend less on power. But I mean, if you're going to pay more per unit of power, you know that obviously the power supply is going to be constant, and you spend less on buying diesel and running your generators. It's something that Nigerians, I think, will embrace. So the power sector policy and regulations, we expect an upward review in tariffs before the end of the year.
Okay. On a final note, where are we with market prices right now in terms of what market prices are looking at? Is there any cause for concern? Are prices flat as we look at the current agri season? That's okay.
Yeah, as the harvest season is just around the corner, so we expect the impact of the harvest season will be that prices of commodities will fall. I mean, tomato, like you mentioned earlier, is down about 40% in the last month, from 20,000 to about 12,000 domestically. That might fall even further. And obviously, other commodities like the bread, the yams, others, we expect that the harvest season will cause prices to fall generally. So, and that should impact food inflation positively. So, yeah, that's definitely going to happen.
Thank you so much, Nosike Nwajide from Financial Derivatives Company, a member of the Economic Think Tank. Thank you so much, and we appreciate your coming through from our studios at the Nigerian Stock Exchange today. Let's take a break, everyone. We'll be right back in a few minutes, and then we'll go back to the marketplace.